After the famous FTX fallout, another popular crypto lender, Blockfi, recently filed for bankruptcy protection. This is the same company that claimed they are not like its competitors that had earlier collapsed, but then within a few months went from being a $3 billion company to a bankrupt failure. Was it bad luck and poor timing that pushed Blockfi into a pit like this? Or the company itself was responsible for digging its grave? Well, let's find out starting from the beginning. One fine day, Zach Prince, a business graduate from Texas State University, set out to obtain a mortgage from the bank he had already taken a loan from. Zach was a crypto investor, so for his second loan application, he decided to include his Bitcoin and Ether holdings in his financial statement. But what happened next left him in shock. The bank officials told him that they had never heard of Bitcoin before, and that it would not be counted anywhere in his finances and assets. Still, to get an idea of it, they did a Google search, read about what Bitcoins were, and concluded that they were something used for illegal activities such as money laundering and drug dealing. On the other hand, the crypto assets were continuously growing, and with the ecosystem of financial services being there to support them, the crypto asset ecosystem seemed to stay. So, while there existed leveraged trading options, there was an absence of a concept of lending and borrowing outside this use case. This incident motivated Zach to fill this absence, and in 2017, he partnered with Flori Marquez, a Cornell University graduate, and founded Blockfi. It was launched as a lending product that would enable cryptocurrency holders to lend dollars without selling their crypto assets. Simply put, it facilitated clients to take out loans in dollars against their deposited crypto collateral or cryptocurrency. Initially limiting its services to US citizens, it selected states. The company aspired to be the leading global lender for crypto asset holders. It would offer the best rates, the most flexible structures, and the tightest possible security. Sounds too good to be true, isn't it? But maybe it wasn't. We'll find out. Companies, both founders Zach and Flori were experienced professionals. While Zach, the CEO, had previously worked in sales, Flori, the COO, was once responsible for managing financial portfolios for a small-time lender, Bond Street. Just a few months after Blockfi was founded in February 2018, it raised $1.55 million in a seed round led by Consensus Ventures, and in July, in a funding round led by Mike Novogratz Galaxy Digital, it raised a huge amount of $52.5 million, and by the end of the year 2018, it managed to raise another $4 million through convertible debt investments with Acuna Capital. With all the funding coming in, the company kept on growing its team, expanding its services, and launching new products. One such expansion was the launch of a crypto deposit account that would provide customers a compound interest of up to 6 to 6.2% on their cryptocurrency deposits. How the company benefited was, it would lend the company to a third party that would use it for trading and return interest, which Blockfi would pass back to its customer. Basically, it was playing the role of a middleman between the lenders and traders. In addition to this, Blockfi was being reported by the customers that they were using their funds for trading, so the company came up with an idea to optimize this. In the year 2019, Blockfi announced that users can now buy or sell cryptocurrency using their balances and claimed to charge zero fees for trading. Was it a no-profit promotional stunt or a scam that would backfire at the company later? Well, neither of the two, because it had a different profit model for the trading business. It would make profits by selling users' trading data to institutional crypto firms that would provide liquidity to Blockfi in return. The data, however, was to be kept with anonymity. Company CEO Zach quoted, "Market makers want the information about what trades are happening, and they get it by having relationships with as many venues as they can support to receive that order flow." Some of these market makers were Blockfi's existing clients on the crypto lending side, while some were also its investors such as Acuna Capital. By then, Blockfi in Series A funding round had raised another $18.3 million, which was to be followed by Series B funding of $30 million, led by the same venture, Peter Thiel's Valar Ventures, in February of next year. The company at the time was on its rise and saw repeat investors, who Zach credited as key in helping Blockfi expand into Singapore and Asia-Pacific region. Next month, in March 2020, Blockfi added another service. It would help users to purchase cryptocurrency using cash. Earlier, this option wasn't available and only crypto assets could be used for purchases. But now, customers could send cash to Blockfi using wire transfer, which they also had the option to use as deposit money and earn interest. To facilitate this, Blockfi partnered with a bank holding company, Silvergate Capital, which was one of the very few that were willing to do business with crypto-focused companies. For deposit money, Blockfi was paying the customers a whopping interest of 8.6%, which was 860 times higher than JP Morgan Chase bank account. Blockfi was continuously growing and expanding from one country to another, from one service to another, but rarely does a startup have a forever smooth journey, and Blockfi was no exception. Its bumpy road journey, which would eventually end up in a deep trench, was about to begin with a small speed breaker. Soon after the Silvergate Capital partnership, a hacker attacked a Blockfi employee's phone through a SIM swap and got hold of confidential users' data. However, the situation was quickly taken under control and, according to Blockfi, sensitive account details such as social security and tax identification numbers, passport and driver's license numbers, and photo scans were not affected in the data breach. The attacker was also said to have made several unsuccessful attempts to withdraw user funds, but the issue was soon resolved and security was restored by the company. Next, August 2020 brought to Blockfi a funding of $50 million in Series Round C. Interestingly, National Basketball Association star Matthew Dellavedova was also one of the investors. A couple of months later, Blockfi took a huge but risky step. It invested in Grayscale Bitcoin Trust, or GBTC, and took up to a 5% stake in its 4.8 billion Bitcoin trust. Zach called it an investment that would add value to the marketplace for liquid and illiquid shares. By February 2021, Blockfi expanded its 5% stake up to $1.7 billion. However, as contradictory as it may sound, around the same time in early 2021, Blockfi registered its own Bitcoin trust with the US Security and Exchange Commission, or SEC, and this trust was put in direct competition with GBTC, which Blockfi had made a massive stake in. People wondered if it was a genius business strategy or a stupid mistake that the company would later regret. Well, we'll let time tell that. It was a time when the market was heating up and Bitcoin's price was hitting its all-time highs, crossing the $60,000 mark for the first time in March 2021. Amidst all this, Blockfi's strong position gave it a humongous $350 million funding, giving the company a valuation of $3 billion. At that time, Blockfi looked unstoppable, but that's not how the nature of business is. On the 19th of July 2021, Blockfi was sent an order from the New Jersey Bureau of Securities, or BOS, that shook the company's operations. It accused Blockfi of an illegal activity of offering unregistered securities to its customers in the form of cryptocurrency interest-earning accounts. These unregistered securities were identified by the company as crypto interest accounts, or Blockfi interest accounts, shortly known as BIA. The order called for Blockfi to stop accepting new BIA accounts residing in New Jersey. The next day, Zach, in a thread of tweets, confirmed the same and stated that BIA is not a security and the company disagrees with the action of New Jersey BOS. He assured that the company is engaging with all relevant authorities to protect its clients' interest and keep all the services available. A couple of days later, BOS gave the company some relief in the form of another week before its new BIAs were blocked. However, this was just the beginning of the downfall of this multi-billion company. Soon after New Jersey's order, other U.S. states such as Alabama, Texas, Vermont, and Kentucky also accused Blockfi of violating state security laws and was either asked for an explanation or a cease and desist order was issued to the company. It came as a setback to the company's near-future plans and launches, such as the Blockfi Visa Rewards credit card. All of this happened within just a couple of weeks, so as an attempt to handle the situation, CEO Zach called on the US Security and Exchange Commission, or SEC, to look into the matter, and an investigation was set up. Unfortunately, that didn't end well for Blockfi, as in February 2022, the company was found guilty and several charges were imposed. The order also found that Blockfi made a false and misleading statement for more than 2 years on its website concerning the level of risk in its loan portfolio and lending activity. As a result, a settlement was reached by both parties, in which Blockfi was to pay a total of $100 million and stop opening new accounts of its high-yield lending product to most Americans. However, existing accounts won't be affected. Blockfi also intended to register a new crypto lending product called Blockfi Yield, which would be the first formal step in a bureaucratic slog toward offering a registered security product to the public. Things were not going well for Blockfi, and within a few months its valuation sank to $1 billion, which was 1/3 of what it was in March 2021. Still, it made huge loans to the crypto hedge fund 3 Arrow Capitals in June 2022, which filed for bankruptcy protection the next month. The same month, Bitcoin's price saw a significant decline, and 2 of Blockfi's main rivals also filed for bankruptcy protection. Things were getting tough for Blockfi, so to keep the business going, it took a $400 million line of credit from the crypto exchange FTX. For those unaware, a line of credit is an arrangement where the borrower can withdraw funds from the line of credit loan account as many times as he wants, within the credit limit. The loan must then be repaid as per the terms mutually agreed upon. FTX also got the option of acquiring Blockfi for a range of $240 million to as low as $15 million, depending on how Blockfi was going to perform in the market and in dealing with legal cases. When Blockfi was somehow managing to stay afloat, the final blow came. In the beginning of November 2022, FTX collapsed, and along with FTX US and Alameda, it filed for bankruptcy protection. The collapse of FTX, which was providing Blockfi credit funds to function, took the company to its deathbed, and on November 28th, it filed for bankruptcy protection under Chapter 11. In its filing, Blockfi stated that it had around $300 million on hand to support the company through bankruptcy, 100K creditors, and between $1 billion to $10 billion in assets and liabilities. While Blockfi sued FTX founder Sam Bankman-Fried's Emergent Fidelity Technologies for its Robinhood shares, which were pledged to Blockfi as collateral for a loan, it was itself defaulted on a $680 million worth of loans by Alameda. Within a span of 5 years, Blockfi went from nothing to becoming a market leader and then back to the floor. There is a lot that can be pointed out as bad decisions that can be attributed to its downfall. However, we wonder what right decisions will the company make to deal with its bankruptcy. A big part of Blockfi's downfall is FTX and Sam Bankman-Fried. We have already shared a video around the chaos of FTX. Sam's net worth went from $16 billion down to 0 in just 1 week. Not only did his net worth plummet, but he also took the crypto market down with him. If you would like to see that video, it's available on screen right now. Click that and we will be over there to share the whole story.